Hello and welcome to another video, Simple Invest video. So today I'll be talking about analyzing my wins and losses from the trading day of 11th of December 2020. Okay, so let's get right to it. So a lot of these arrows are not my actual trades. Some of them are from my back testing. So let's take a look at the first trade of that I did on 11th, first actual trade that I did on 11th of December. So take note that I'm trading not purely, but I want to dedicate more time to trading on the USD Japanese yen pair. And I did have I made a mistake, which I will analyze later by trading on the USD Canadian pair, which actually lost me, was a losing trade. So first up, let's double check whether this is the correct one. Yeah, correct. So the first trade of the day was on the USD Japanese yen on 228. 228. Yeah, so that was here, this green arrow here. So I saw that there was a breakthrough on the downside, so I kind of missed it. Ideally, this blue arrow here would be the perfect place to enter, but I missed it, and I missed even the second down arrow. So I saw it like quite like half an hour later or something, and it was, yeah, so I saw that it was retracing a little bit. Seems like okay place to enter, so I entered and I put the stop loss at least 50 pips. I think I put it around here, about 70 something pips, 70 something points, sorry. And eventually it went down. I put my take profit at about 100 points. Is that correct? Let's see. So I took profit. It was a sell trade. I took profit at 256, which was here. 255, 256. Check. Yeah, slightly above 100 points. I think I set my take profit a little bit wide. I think I set it like maybe 200 or 100 plus. I set it more, but I saw that when the trade was going in my favor about 100 points, I took profit. So that was about 100 points, 112, 110 points of profit there. Okay, so that was a good one. Then let's take a look at the next one. So the next one, actually, I didn't stay with my discipline of trading only the USD Japanese yen pair. So I went to trade on the Euro USD pair. Okay, let's see what happens there. Okay, that was also considered a winning trade. It was a profitable trade. So I placed the trade on 11th of December, 9:37 server time. So take note that this timing is GMT plus 6, I believe. This is based on my broker Ananda. So it's Ananda's brokerage time server timing, which is GMT plus 6. No, sorry, it's GMT plus 2. My bad, it's not plus 6, GMT plus 2. And I'm living in a time zone in Singapore, which is GMT plus 8. So there's a 6-hour time difference between the Ananda's server time and my own local time. So I entered it here, 9:37, which was in this bar. So if you look at it from here, it's pretty obvious that it was a breakthrough on the downside. So it was a short signal, and I entered on the subsequent signal. I don't know when I entered, but it's around here, and it went down. So when did I take profit? I think it's around here, if I'm not wrong. 10:14. 10, 10:14. Okay, so it's around here. 10:14 is actually around here. Okay, so what happened was that this was the lowest point, right? And as it went up, so I followed my previous lesson that I learned from the 10th of December, was that to set my take profit to be around slightly above the lowest point of the previous dip. So set it slightly above the lowest point of the previous dip and wait for the price to take profit from it. to trigger that and as a take profit. But I think when I was looking at the candles, I saw this candle. So these two upwards candle, which made me feel a little bit uneasy about trend reversal. So I on the following down candle, which was around 10:14, 10:10 to 10:14. So I saw that it was going around here and I took profit around here. So this was a good 133 points of profit. So if I set my take profit a bit further, but for example, if I set it at 200 points, I would have benefited, would have taken 200 points of profit straight away. And I remember this Euro USD trade was something that I put half of my usual weightage in as well, because I'm a little bit apprehensive about trading Euro USD as I suffered quite a few losses losing trades on this pair. So whenever I trade Euro USD, I tend to put half the lot size that I usually put in the USD Canadian dollars or the USD Japanese yen. So even though it was a good profit, 135 points, but yet it was less than what I would have usually earned because it was half the lot size. Okay, so those were the two winning trades. So actually, based on these two winning trades, I could have ended my day here. But towards the end of the day, yeah, it was at night for me. I sort of got greedy, I guess, because I saw this on the USD Canadian dollar, USD Canadian dollar pair, and it was quite an obvious signal that it was going uptrend. But then again, yeah, I mean, I missed this. So I missed this at 10 a.m. This was an obvious uptrend. So I missed this. I missed the second one, which was considered around here, but this wasn't a very strong uptrend. And I thought this was a good uptrend to go in. So I missed this entry point and I entered here. But regardless, it would have been a loss for me because the trend immediately turned against me and it triggered a stop loss. So the problem with this was that because this candle was so wide, I set my so usually based on my strategy that I backtested, I should have set my stop loss at 50 points. But because this candle was so wide, I set it at 100 points. And I immediately took a loss of 100 points instead of 50 points. So there was quite a big loss. If I set my stop loss to 50 points, I would have still been quite profitable for the day because I already took profit more than 100 points on the USD Japanese yen. I already took profit more than 100 points on the Euro USD dollar. So, and now I suffered a 100-point loss from the USD Canadian dollar. So that was a bad loss. So if I had set my stop loss to just 50 points as following my usual strategy, I would have taken this loss a lot of a smaller loss and would have ended up a bit more positive on the day, end up with more winnings on the day itself. Okay, so that was it. So I only did 3 trades. So my concept now is that as long as I'm winning, to do not say I'm winning, to do as minimal trades as possible per day, because with every trade there's a bit of a spread and commissions to be charged. So the less trades I do, the less commissions I incur, and the less I have to pay the brokerage. So yeah, so I wanted to do as minimal trades as possible. So actually, with my 2 winning trades of the day in the morning, I should have ended all trading. I should have traded this USD Canadian dollars late in the night. So that was my greed. So if I didn't trade that, or if I traded this, if I set my stop loss to the normal 50-point stop loss, I wouldn't have taken as big of a loss and I would have ended a bit more positive on the day. So yep, so today's analysis is pretty short because I only did 3 trades in total. And I wanted to take this opportunity perhaps to talk a bit more about what kind of market shapes like so this might be useful to any of you who are watching. So if you are looking to trend trade, there are generally 3 kinds of trends in like a forex market pair. Basically any instrument in general, like not just forex market pair, it can be a stock, it can be a stock price, it can be a commodity index price, it can be a S&P 500 index price, it can be futures price, I believe, as well. So there are, in terms of charts or candlestick charts, maybe even line charts or bar charts or other charts in general, there are just three kinds of trends. The first one is what we would consider a strong trend. So let me find a strong trend. Actually, this is good enough. Yeah, this is considered a strong trend. So here we see a strong upward trend, right? Based on from here after it broke out. So you can see this whole page is the price is trending generally upwards. So there's a bit of waviness to it, so a bit of a correction, but generally it's a strong upward trend. And the second one would be what I would consider a weak trend, which is more of a like an average to weak trend. For example, something like this. So this is considered what I would consider a weak trend because you can see that the USD Japanese yen is generally trending downwards, but there's a lot more fluctuations in between. So it goes down, it whips up, corrects up, goes down again, corrects up back to the original price of here, same price as here, corrects, goes down again, then corrects upwards again, goes down a little bit more, and the lowest breaks through the support of these 2 points here, and it goes up again, and then eventually it goes down again. So it's generally trending downwards, but it is a much weaker trend as compared to the strong trend here, where the upwards trend is more defined. Like it just goes up, especially here. The upward trend is very consistent. It's very strong here. It just goes up. Each consecutive candlestick just goes up higher and higher and higher and higher, and there's a lot less fluctuations, a lot less corrections as compared to this. So this is more of an average or a weak trend. So I like to maybe call this a weak trend. And the third one would be a sideways trend, which is also another very common characteristic. So sideways trend is something like this part. So where you can see the price, this can be considered maybe a weak trend upwards, but if you're talking about this chunk here, definitely it's more of a sideways trend. That means the price is not really going strongly upwards or downwards. It tends to just fluctuate around the same price area. It goes up a little bit, down a little bit, up a little bit, around a bit. So we call this either the sideways trend or the flat, or the market is flat. That means there's not much movement. It's just generally going up and down about around the same prices. Or like somewhere in this section here, like if I box this section here, yeah, from here to here, from here to here, this is generally a sideways trend, or the market is flat as well. And it's not really going up or down. This is a strong trend if you box from here to here. So this is a strong downwards trend, this part. And we have probably a weak uptrend here. That means it's going out a little bit, but there's a huge correction downwards, then goes up a little bit, correction downwards. So this is considered a weak upward trend. This is a strong downward trend. And this is a flat market or a sideways trend. So those are the general three market shapes that you will see in any price chart, whether it is for Forex pair, whether it is for stocks, or whether it is for futures price, and whichever. I'm sure these three general trends are pretty common. So the trick is when you are going to trade a particular strategy, it is can you identify the trend, and you can identify what sort of trend it is, then you can do the appropriate, so you can decide whether is it a good time to place your trades, what kind of strategy to use, and so on. But of course, seeing these trends in historical charts is easy because the price has already come out. But predicting whether this trend will appear in the future price is very difficult, right? Nobody knows for sure. Nobody decides what the price will be, because all these are decided by market movements based on the buying and selling of all the market movers in that particular instrument. So like this is a strong trend downwards, but before, if you're looking at this, you will still consider this price to go sideways. But usually sideways trend is what we call the consolidation phase. A flat market is the consolidation phase, where most of the major market movers are staying away, and they are waiting for a significant support or resistance to be broken before they enter the market. So normally, if you follow a sideways market like this, the breakout is usually followed by a strong trend. So this breakout here. So normally, if you're trading breakouts, that you're trading big moves in the market, this kind of strategy, like looking for sideways market and just observing when the breakout occurs, is actually not a bad move, because strong market move like this, a strong downwards trend, strong market trend usually is usually predicated. That means before a strong trend occurs, there's usually a lot of consolidation or a lot of non-movement, a lot of flat markets. And then suddenly when the price moves, most of the market participants enter and they push it in that general direction that they want it to go. Like in this case, they know that, oh, it's going down, so let's join the downwards move. So let's short the market together, and the market goes down strongly. And then you'll see like this is a flat market again, and then there's a trend here, but this is not really a strong trend. So it's a flat market followed by, this is either more flat markets, or this is what we consider a weak trend. So it's a weak uptrend followed by a weak downtrend, a lot of fluctuation, a lot of whipsaw, then followed by another weak uptrend, followed by more sideways market. Then now sideways market, a lot of consolidation, and then suddenly, boom, there's a huge downtrend that happens. So generally, yeah, so hope this helps. These are the three market trends, three kind of waves, three kind of market trends, whichever you like to call it. But generally, these are the three kind of shapes that you see in any market instrument. I hope that has been useful to you. And thanks for watching the video. See you guys next time.